Hello and welcome to Money, Money, Money. It's that time of the year when you're probably wondering if you've done all you can to save tax. Yes, the financial year is on its way out. So we've decided to make life a little simpler for those of you who are somewhat behind the curve via this last-minute tax planning special edition of the show. Now, we will get you the tax checklist as well as the answers to all of your tax queries right here on the show. Let me start by welcoming my guests. We have Mayur Shah, Partner Tax at EY, and also Harshvardhan Rungta, who's a well-known financial planner. Thank you, both of you gentlemen, and thanks for joining us on the show. Now, before we get down to the questions, I want to get some of those hygiene elements out of the way. I mean, a lot of people would be prudent planners and would have taken care of their ATC limits and ATD limits, etc. But I want to start by getting your sense, Mayur and Harsh, on the basic exemptions that are available that people should keep in mind. Before we even talk about exemptions, the definition of income. And Mayur, let me start with you over there. For a salaried individual, salary, of course, forms the bedrock of income. But what are the other areas of income which we should keep in mind? Because the taxman will probably come after those sources of income as well.
Sure, and you are absolutely right. It is very important to understand the definition of income in terms of what will be subject to tax and what will not be subject to tax. So interestingly, apart from salary, there are other four heads under which income generally gets taxed. One is income from house property. We all know that first house property will be considered as self-occupied and there is no income which is getting taxed. But if for the investment purpose you hold another house property, that will be deemed to have been let out and it would be taxed even if person is not deriving any rent therefrom. The other thing is, very importantly, is that, if any gift which are being received other than from relatives, in such a case, if such gifts are in excess of 50,000, would be subject to tax as your own income. And you as a recipient of gift would liable to pay tax thereon.
Now Harsh, what's your experience? I mean, I know it's the last few days of the financial year left. Do you think people have become more tax prudent and people usually have their house in order? Or do you still have some clients coming your way saying, I haven't saved tax, is there anything I can do?
Absolutely, Surbhi. In fact, if you look at a scenario where situation one is there's a salaried employed. So, there is a deadline given by their employer to submit investment proofs. So
which is why there's discipline at least, yeah.
So that is, most of them in and around that much time, during that deadline, complete their investment planning for taxation purposes. For business employees, for people who are into business and self-employed, well, these people tend to come right till the end of, the last day, which is 31st March. Because of various reasons, they're trying to look at all the adjustments that they can do in the, what is the impact of tax on their books. For them, another deadline is the advance tax, the filing date, which is 15th of March. So they come around that time and they try and assess their income and finish up all their tax saving products. Now, what is important is, if you are going to wait till the last moment, you're invariably going to buy something which is conveniently available to you rather than what you actually need to buy. So this is one element which people tend to overlook when they plan only for taxes and not from the investment or financial planning goal.
Sure, absolutely. In fact, we're going to talk about the self-employed individuals as well a little later on the show. But let's start by understanding the exemptions and the deductions that are available. Let me start first with the investment category, Mayur, because the ATC limit is so bundled. Your ELSS and, your ULIPs and PPF, debt, equity, everything comes under it. But help us understand which are the specific investment vehicles or instruments where I can save tax.
If you are an employed person, normally it is being taken care by PF because invariably your contribution to PF is more than the limit which has been prescribed. So, you would exhaust that limit.
That's the EPF or the infamous EPF after Budget 2016, should I say.
That's exactly. Apart from that, you can make investment in NSE, PPF and ULIP, all insurance, other insurance product, ELSS. So all such items which are available for from an investment point of view. Apart from that, you can also invest in deferred annuity or annuity plans or pension funds, which allows you to have a security from retirement perspective. At the same time, your investment goes in. and it earns income but does not get subject to tax thereon.
Certain deductions that are available under the heading of health. Now, you get deductions when you buy health insurance, as well as in case you have certain disabled dependents, or you've taken care of certain dependents in certain specified categories, disease categories, etc. So if you could throw some light on that.
Yeah. So, if you have a dependent disabled person, if you incur any expenditure on medical treatment for such persons, you get enhanced deductions for such medical treatment. Apart from that, if you have parents and if you are incurring any expenditure or you are paying any premium for them, you get an additional deduction even for that as well, apart from yourself and family members.
But Harsh, I mean, how beneficial are some of these deductions available? Do you find people actually availing them, or is the awareness level still a little low?
Now, when you speak about specific provisions under, say, probably Section 80D, which covers Mediclaim premium. So, well, it is a popular section.
That's a well-known section.
It's a well-known section, and people do take full advantage of that. In fact, we have seen people come, and you have a choice. Let me put it like this to you. There are certain policies in which the premium even goes to about, say, 50,000 rupees, considering the entire family put together. Now, each individual is eligible for a deduction up to 25,000 rupees. So, we have two members paying 25,000 rupees each for the same policy. So, both of them can claim a deduction under Section 80D.
And what about in cases of where there is a disabled dependent, or if there is specific critical illnesses? Which are the illnesses that we are talking about?
So, well, we talk about grievous illnesses such as, say, possibly treatment for cancer or treatment for, prescribed ailments which are very serious and grievous in nature. So, those are classified under those particular sections. One important addition that I'd like to make.
This is DD, 80DDB is what we are talking about, specified illnesses.
Absolutely. Section 80DDB. Now, in addition to all the investments that we've done for Section 80C, we just spoke about that. There are certain expenses that we incur which also qualify for deduction under Section 80C, such as if you're paying tuition fees, full-time educational course, if your children are pursuing such course, you're paying your school fees.
Sure.
Those also qualify for deduction under Section 80C.
Sure.
Now, what happens is, if you're not aware of that particular provision, you are actually paying the fees for your children's education, but you don't, because you've come last moment, you're such in state of panic that you need to submit something, whichever. So you land up buying some investment in addition to knowing that there are already certain expenses that you've incurred, like your tuition fees, as I mentioned. Then there is the principal that you pay for your housing loan.
Yeah. So housing, I was coming to. I mean, those are slightly well-known categories. If you've got a housing loan, you get a deduction on both the interest component, which is 2.5 lakhs if you're going by the new year budget. That's of course the new financial year. There is also the reduction available on the principal amount, and then the education loan also, of course, as we've spoken about. Anything else that we're missing out, Mayur, in this list? Any other categories or any other events you might have, gone through in the year on which you might be eligible to claim a tax deduction?
Sure. See, another item which we normally miss out is that, any installment which you pay, not for repayment of loan, but for a property which is under constructions, those are also eligible for 8IC deductions, which we normally don't know, except the initial payment which you are booking for allotment of a property to you. So, apart from that, all the other payments which you make are eligible for deductions, which we generally miss out. Other than that, the another item which we miss out, that investment which are made in past could be yielding certain income, such as NSC, if we look at it. Once we have made the investment, every year you earn some interest thereon, which gets automatically reinvested in NSC itself, and that will also be eligible for 8IC deductions. So probably we need to look for those kind of investment which has been made in past, which are even today eligible for 8IC deductions, and we should not miss out, because there you don't need to make any additional investment thereafter. So these are the other aspect which we need to be aware of. Another deduction which one should look out for is that if you have saving account, interest on saving account, or any term deposit, etc., then interest thereon, there is also a deduction up to 10,000 which is available for such income as well.
Okay, so those are the hygiene elements. So we're going to take a quick break on that note. More on the other side. Don't go away.